it tells you also that a chart can still fail. And this chart continues to fail at key support lines. And so what this means is there's nothing that's going to be perfect out there. You can't be 100% trader. You never will be. All right. The market is the market. All you can do is get probabilities as high as you can. For me, that's 70 to 80%. 70 to 80% success rate. That's the best I've been able to ever achieve in the live day trading room. Granted, we're in the 90% range, but that's day trading. It's much shorter time frame. We're just jumping in, we're jumping out. But that's what I want to make clear to you guys, is that you really have to understand that you're never going to achieve perfection. If anyone ever did, then you're off and retiring and you're just off on your yacht living in the Mediterranean, whatever you are. But the point is, the markets keep you on your so stocks are going to fall. Kind of messed up thought process, but the bottom line is a strong economy means higher interest rates, or at least higher for longer before the Fed is willing to cut. So that again is a negative. If we look at the 10-year yield, and I'll pop up my chart in just 1 second here to take a look at it. In fact, let's do it right now. Let's take a look at the 10-year. So this is the 10-year yield. And the reason why you want to pay attention to the 10-year yield is it's basically going to be inverse to generally what the stock market does. The higher yields go, remember the psychology of it. If you can make 10% in a bond, why would you risk investing in a stock when there's risk of that stock going down? So there's a trade-off, right? Now, some people are going to require 20%. Some people are going to require 2% return on a bond to make it worthwhile to switch out of stocks. But there's a trade-off, meaning that the higher yields go, the more people are going to say, you know what? I have this, potential to make risk-free 5%. Let me not risk my money in Tesla stock right now at these levels. Let me put it for that guaranteed 5%. And that's why higher yields in general are a negative for the stock market, right? It forces money or draws money out of it. This is why in 2021, when interest rates were zero, there was no one that wanted to be in the bond market. Everyone said, hey, why would I be in the bond market for a 0.01 return in my money market or in my CD or in my bank when I could just go in the stock market? Sure, there's risk, but you know what? I'll take that risk because at least there's nowhere else to put my money to make any money whatsoever. So that was the trade-off, and I think that's important to kind of recognize and go from there. All right, so let's go to the crypto charts here. Let's get right into Bitcoin, see what we got. So Bitcoin, guys, you can see clearly continues to run into major resistance. The 25,300 level continues to be the level that I have on the chart that is a sticking point for Bitcoin. All right, the reason it is, number one, you have a beautiful parallel channel right here. Look at the trend line, how it kind of connects through these highs. And then look at how many times we've pierced this line and haven't gotten through. In addition, the highest pivot, this is the highest pivot since the June collapse, right? Since this collapse over here, the highest pivot was at 25,000, approximately 300. So it makes sense that that's going to be a sticking point in the near term for resistance in Bitcoin. Now, again, am I short Bitcoin? The answer is no. In fact, in Verified Investing Crypto, we still have a long on Bitcoin, but I am kind of itching to move out of it and potentially short it. So let's go to Ethereum here, see what Ethereum has in store for us. Now, Ethereum continues to have kind of the same channel lines up here. There's a lot of resistance. The positive on Ethereum, you could make a case that it's making bullish consolidation. It's not the prettiest, right? By no means is it the prettiest bullish consolidation, but it would be classified loosely as bullish consolidation. Now, what does that mean? Well, it could mean we have one more move up to maybe around $1,785 before we hit major resistance. All right, so again, keep an eye out for that. That is a possibility on ETH that you could have one more move up. What would change my mind? See this upsloping trend line that we got below briefly and tag this support. If we start trading back below that, that would negate the bullish pattern, and you'd have to start expecting a bigger move back to the 1,300 range on that chart. So let's look at natural gas, because natural gas continues to befuddle even me. And what this shows you folks is that even I am not without, uncertainty. Like everyone, and I want to be clear on this. And thank you there on that CML leukemia story. I appreciate that. But basically what we're seeing here, look at the rollover in natural gas. Again, this morning, we're seeing more forced selling. And what I want to tell you guys about this is that Natural gas to me is a no-brainer on a swing basis that it will recover, it will have a big bounce, but it tells you also that a chart can still fail. And this chart continues to fail at key support lines. And so what this means is there's nothing that's going to be perfect out there. You can't be 100% trader. You never will be. All right. The market is the market. All you can do is get probabilities as high as you can. For me, that's 70 to 80%. 70 to 80% success rate. That's the best I've been able to ever achieve in the live day trading room. Granted, we're in the 90% range, but that's day trading. It's much shorter time frame. We're just jumping in, we're jumping out. But that's what I want to make clear to you guys, is that you really have to understand that you're never going to achieve perfection. If anyone ever did, then you're off and retiring and you're just off on your yacht living in the Mediterranean, whatever you are. But the point is, the markets keep you on your toes. And Lance saying Gareth really chased natural gas. No, I didn't chase it. My entry, literally, if we get a 15% bounce, which is about 15 cents on natural gas, I'm break even. But the point is that I thought it would bounce already, right? So I think that's the key, is that, again, this is why I average in. I continue to kind of accumulate slowly, so it gives us that opportunity to make sure that we're close to the levels. But there's no doubt that I would have expected a bounce on it already, and it hasn't happened. All right, let's take a look at gold. I want to look at gold here. The gold chart here, we are seeing it trying to hold support right here. I still think there's one more move down on gold here, down to this level here around 1800, before it becomes a full-fledged bull market. So again, we'll watch that to see.